So, Adam, thank you very much for doing this. You wrote an article called "The Global Economy is Now Distinctly Victorian," and I wanted just to talk to you about that. One of the points that you make is that the future global financial system is going to be multipolar, and I thought I would just ask you to develop that a little bit. What does multipolar actually mean to you? And I mean, how many poles are we talking about that really counts? And what constitutes an effective pole?
It's a really good effort to try and nail me down, Jeff. Multipolar, I mean two things. I mean multiple currencies that people run to in times of trouble. And so what is defined, in a sense, the U.S. dominance, or rather the dollar dominance of the last 50 plus years, is that in the end, whenever there's a real crisis, people run into the dollar. Even when there's a crisis in the U.S. like we had in recent years, they run into the safe end of the dollar, U.S. government assets. Recent events in Congress may undermine that slightly, but that's the first defining aspect of a monetary or financial pole. The second is, do you have an economy that not only is able to finance all of its corporate needs in domestic currency, but able to finance other people's needs in your domestic currency? And by people, I really mean business and commercial transactions. So there are a number of places in the world that are one but not both of these. So in China, for example, people don't flee out of China's money when there's a problem. That's partly because there are barriers, but in reality, people are calm about the Chinese economic situation. But they're not in a position to be financing all of their needs. If you think about Hong Kong and Taiwan as really part of their economy, let alone other people in the region. By the same token, or maybe not, but complementary, I should say, the UK is a place where they've got a real financial pole or center, and they can do a lot of financing of both what happens in the UK and around them, but nobody's running to the pound as a major store of value and haven't for 70 years plus. So you need to have those two components to be a pole in this multipolar system. And I think, as Barry Eichengreen, the economic historian, has argued, it's not uncommon to have more than one reserve currency, more than one pole. And I think we're going to see a world not too distant future where China, US, what's left of the euro area, and to some degree Japan are all going to be poles in that sense.
So if we just hypothesize that a multipolar financial system consists of those four areas, and let's give ourselves 10 years for that to actually materialize. What happens in the transition between a dollar-dominated system, because as you were saying, probably not too many people are going to flee into any of those other currencies now, and each one of them is not really as much of a pole as the U.S. is. So with all our problems, it's still pretty much a unipolar global financial system, or let's say it was at the beginning of this century. So in a transition to multiple poles, what actually happens? I mean, there's historical precedent from passing one pole to another, Britain to the U.S., but I think you're talking about something which is basically unprecedented in terms of the experience of anybody who's alive now.
Well, you could argue, if you wanted to push it, that in the early 19th century it was a pound-centered system and it spread out. But I think your point is valid, that certainly for anybody alive, certainly the last 100, 150 years, instead of consolidating, we're moving to multiple centers. And a lot of political scientists have been talking about this for decades. In the narrower realm of money and finance, which you're asking me about, and which is all I can talk about, I think the transition takes several forms. I think one piece of it is we are going to see a slow, probably stepwise rise in the basic interest rate the U.S. has to pay on its debt. Now that's going to be overwhelmed at any given time by cyclical factors and various behaviors of other countries, but the trend is going to be upwards. The second thing is we will see a similar downward trend in the interest rate in China, essentially. They've been pushing down the interest rate through artificial means. People assume they'll deregulate, rates have to go up, and for domestic purposes they will, but their government bond rate I don't expect to go up even when the pressure is off. A second thing that's going to happen is there will be more conflict in minor ways. I know you've talked about, with various people, the so-called currency wars that turned out to be, in some ways, much ado about nothing, as the old saying goes. I mean, so we had Brazil and India complaining about the U.S. dollar going down when the U.S. was in trouble, and then complaining when it bent back up over the last 4 months. What I think you're going to see, though, is a little more of that kind of conflict among the major economies, China, U.S., Europe, arguably Japan. Is it going to be outright conflict? Is it going to be trade war? No, but it's going to be harder to get agreement on principles at the G20. It's going to be harder sometimes for the U.S. to prevail in various discussions. I think the third piece that's going to happen as part of this transition, which I tried to write about in that piece you kindly cited, is a breakdown of other public goods being provided. So the U.S., arguably in its own interest, did a lot to keep the economic system of the world going, even from the 50s to the present. So when the rest of the world would have a downturn, the U.S. would import a lot more. When there were troubles elsewhere, the U.S. would provide lots of dollars if there was a panic. Intellectual property rights, perhaps in part because U.S. and friendly countries had most of them, were very heavily enforced by the U.S. Shipping was very heavily protected by the U.S., and on and on. And I think you're going to see some erosion of the provision of these kinds of goods, the amount of stability you're getting out of the U.S. alone, because it doesn't capture all the benefits anymore, and it would require some explicit agreement with the Chinese or with the Europeans to provide these things. And that's harder to come by. So you put those three together, the rising interest rates in the U.S. and the closing interest rate gap, the bits of conflict in international fora, the under-provision of public goods, or at least declining provision of public goods, and you end up with a more unstable global economy. Not in a huge sense, I don't mean chaos, but things will be more volatile on an ongoing basis. That's how I view the transition.
So if everyone were convinced that you're right, and the question posed to you would be, what should be the governance mechanism? What kind of agreements need to be thought about in order to create the best kind of system we could, given this multipolarity? And let's assume that, you know, there's a need for some rules and some enforcement. How does that multipolar system differ from what we've known in the past? I'm not talking about the impacts you talk about, but I'm talking about the framework. You know,
Got it.
Let's assume that there's a will to have a framework, difficult as it might be. What are some of the things that policymakers would have to think about?
Well, let me pick up on that, because I think, actually, Jeff, there is more of a will to have a framework than people sometimes give it credit for. I mean, that's one of the things I assert in that article, right. And I think others would back up, that the rise of these very strong middle classes in China and some of the other key emerging markets, as well as the entrenched internationalization of people in Europe, mean that there's a whole bunch of people out there who want things to continue as they are in terms of globalization. The U.S. actually becomes the problem child in a sense. But so I agree. Let's just assume for the moment that there is some will, some coalition. Part of the reason I invoked Victorian times, or really 19th century times, as the comparison is because after the Napoleonic Wars, there was something called the Concert of Europe. This is the stuff Kissinger used to write about in the diplomatic sphere. Essentially, it was a group of a subset of the world's governments who were the most powerful, but were not all of the powerful governments, who really wanted to see each other stick around and put in place a number of non-aggression pacts, as it were, as well as mutual assistance pacts. And it's not the nicest outcome, but it is kind of what I see ahead for the next 5-10 years of the global economic system, as you put it. So it means, in practical terms, that yes, there's a G20, but really it's China, US, Europe, maybe Japan on specific issues, maybe Russia or India or somebody, that even though there'll be some lip service done to international institutions, most things will be negotiated state to state among these big states, and that it will be a very status quo bias. It won't necessarily be welcoming to NGOs or trans-border movements, let alone terrorism, of course. And it won't necessarily be welcoming to new rising powers. Not to say they'll be hostile, but their interests won't be taken into account. It'll be a very much trying to react to some of those volatilities that I mentioned were just going to increase.
So the notion of, let me raise a few things and tell me how this system would accommodate it. Let's say a country like Brazil that feels, impetus to leadership in Latin America, feels it ought to be in this concert. Are you saying that actually this concert is going to really undercut the notion of many sort of big emerging markets in terms of their voice?
Yeah, I think it is. I think, again, I'm not saying this is the fair or the ideal outcome, and it may not be long-term sustainable. But we look back at Brazil in the last few years, or I should say, the governments of Brazil, and the governments of Brazil have done some incredible things at home, and the Brazilian economy has taken a big leap forward. But at the same time, in most international fora, the bulk of the Western governments, but also the Asian governments, viewed Brazilian activities as disruptive in trade, in discussions over investment in intellectual property, on climate issues, on the currency issue. They were essentially troublemakers. And the thing is, for all their advancement in size relative to the rest of the world and development, they still don't have anywhere near the pull to influence really what these other countries do. All they can do is, in something where there's a very formal arrangement like the WTO, effectively be a veto point. And you can get a lot of mileage out of that, but you don't get any friends out of that. And so to me, I think it is true that these middle tier powers are going to be held at arm's length, or alternatively, China will favor countries close to it that function well with it, like Malaysia. US will favor Mexico, and that will put additional pressure to sort of keep out of the main discussions India or Brazil.
The point I'm trying to raise is that when you say status quo, I wonder whether that is much more of a radical notion than it sounds when you think about some of the trends in the world that are anything but status quo. So I'm thinking about, for example, the disruptive technology or the rise of middle classes. You're saying the rise of middle class, the middle class wants globalization, but they also can be quite politically destabilizing in terms of existing arrangements. So would it be fair to say that you are actually describing a status quo ante in a situation in which there actually is a lot of dynamic change, and therein lies a really big question mark in terms of how this system, modest as you're making it, will be sustainable very long?
That's a really provocative question, and I mean that. That really makes me stop and think. I guess what I believe as of this moment is that it's sort of, let's call it the Les Mis scenario, that there is revolutionary activity, there are unsatisfied people, there are currents of change, but in the end, the top forces manage to keep them down. And so let's just pick two of the key concepts you put out there, like disruptive technology or in the middle class. So disruptive technology, in general, what we're seeing is, as it's always been, that most disruptive technologies come from the countries at the technology frontier. They sometimes get implemented at scale in poor countries, and that competes out, but usually the development of the new big game-changing technologies is at the frontier. And in the world I'm talking about, I could see China converging the technology frontier converging towards U.S. and Europe very quickly.
Right.
But it wouldn't necessarily work for Brazil or India in the same way. In terms of the middle classes, you're absolutely right. There's a huge literature and evidence right now looking at Egypt of when you get frustrated middle classes, that's really when you get revolt, revolution, instability. Not so much just when poor people are put down. But again, does that cross borders? Does that challenge the supremacy, in a sense, of the U.S., China, Europe? I think the answer is no. I think the fact that the euro area, for example, has been able to temper and channel a lot of the people being upset with the austerity programs in Europe right now is a strength. It may not lead to the outcome we want, but it means in this game they will have more of a strength. So then you say, well, how stable is this over the long term? And that's a very fair question. My belief, perhaps cynically, is that this is quite stable because there will be enough countries of which are of small size that will become essentially parts of these spheres of influence. It's not the right term, it's the best term I can think of. Right. So the greater Chinese co-prosperity sphere, in a sense. Europe is already Europe. U.S. is North America through into Central America and increasingly the western coast of Latin America. And so you're left with these very few big countries that stand on their own and aren't quite there yet. Brazil, India, Indonesia, Russia, arguably South Africa. And they will want their own say, they will want their own voice, but I'm not sure they're going to get much for it.
Okay, I think that I think we'll leave that there. It's obviously a real kind of unknown as to how revolutionary the forces actually are. I mean, it's easy to talk about it in revolutionary terms, and whether or not this concert, which is a real it's a very interesting concept, but whether it can accommodate some of the changes that may very well accelerate, that changes we can't see. I just want to end by asking you about your own feeling about the ability of the financial system as it's evolving, whatever governance mechanism, to accommodate not only the middle class, two things you talked about, the rising middle class's enormous appetite, and also the rising need for a kind of a massive infrastructure needs.
Yes.
Is there something about our current financial system that would lead you to say, we're going to need more financing in different ways, in larger orders of magnitude? Or do you feel that basically it can accommodate rising requirements on a really massive scale? Because the middle class you're talking about, and you also mentioned infrastructure, even whether the infrastructure is related to climate or energy or
right.
Transportation, every area you look, there are massive needs. And I just wonder if there's something about the financial system that would make someone say, at this stage, it isn't actually capable of meeting all those needs.
I think here's where I guess I sound a little more optimistic, but probably in a slightly perverse way. I think what generally happens after financial crises is you see a sustained rise in risk aversion.
Right.
So households and investors, once burnt, twice shy. People at these financial institutions in the private sector don't want to get caught out. Their bosses don't want them to get caught out. They don't want to run afoul of regulators. Regulators err and bank supervisors err on the side of overcaution. You end up with, not for decades, but usually for several years in these situations, a real move to desire for safe assets and less speculation. Not because people become angels overnight, just a very reasonable human response. And this is usually, and I think is now, being compounded by what people like Carmen Reinhart and Ken Rogoff have referred to as financial repression. that governments say, well, while we're at it, why don't we require all the financial firms to hold lots of government securities because that's a safe asset, and here's all the good prudential reasons they should, but by the way, that helps fund our deficits that we accumulated through these years. And I think the U.S. in particular, but also China and Europe, are going to be in that situation. They're going to say, I've accumulated a lot of debt, I want to place a lot more debt, I'm actually having to be more competitive, especially the U.S., in terms of placing my debt than I used to be. There's more competition, other assets out there. So I really have to twist some arms and get people into this infrastructure spending. So to me, it's not a very good economist notion, but maybe it's a good historical notion. There's sort of this overdetermined combination of demand and supply factors that I think push us in this direction of infrastructure. So then what you said, realistically, can the financial system support it? Can it get the financing together? I think the answer is yes, in part because the financial system are going to be forced to do this and displace other investments, which is, again, isn't necessarily a great thing, but it's reasonable. And second, because, and this is something other people have written on much more sophisticated than I, there's this idea we have that part of the problem of the last 10 years was there's too much savings around the world and too few good assets or safe assets to put them in. Fed Chairman Bernanke raised this as one possible explanation at the start of the crisis for what was going on. And so while there are people like the McKinsey Global Institute and others who've talked about these huge infrastructure needs and running out of savings, I am much more on the savings glut side of the argument, that there's a bunch of unmet appetite for relatively safe assets with relatively fixed returns. Nothing is ever truly safe, but infrastructure will look that way. So I think it can be done. There'll be costs in terms of lower returns for people, less choice. There'll be costs in terms of the financial sector efficiency, but I think it is quite doable and it's not the end of the world by any means.
Okay, I really appreciate it, and I think it was a very interesting view of the world, and I'm deeply grateful to you.